Well, good afternoon and welcome to this sixth CAFII webinar of 2025, in which we will engage in a conversation on Financial Literacy Month. My name is Keith Martin, and I am the Executive Director of the Canadian Association of Financial Institutions in Insurance, or CAFII. On behalf of myself and the CAFII Board of Directors, and my colleague and CAFII's research analyst, Robin Jennings, I'd like to thank you for joining our webinar today. CAFII is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 14 members include the insurance arms of Canada's major banks and credit unions, along with their insurer partners, which underwrite credit protection insurance and travel insurance. Now, members of the audience, if you have any questions you would like to ask the panelists during this webinar, please send them to us as the host using Zoom's Q&A function, and Robin will pose them on your behalf. Now, CAFII and its members are very committed to promoting financial literacy and to working with regulators and policymakers to ensure that information is readily available to consumers to allow them to make informed decisions. I will now turn it over to my colleague, Robin Jennings, to introduce our guest speaker, Manon Bombardier of the Financial Consumer Agency of Canada, or FCAC. Over to you, Robin.
Thanks, Keith. Hi, everyone. Thank you all for joining us today. It is my pleasure to introduce Manon Bombardier, the Deputy Commissioner of the Research, Policy and Education Branch of the Financial Consumer Agency of Canada, or FCAC, as of May 26, 2025. In this role, she leads the agency's efforts to strengthen financial consumer protection through evidence-based policy, strategic research, and public education initiatives. Prior to joining the FCAC, Manon served as the Assistant Deputy Minister for the Pest Management Regulatory Agency at Health Canada, where she oversaw the agency's operations and transformation agenda, driving regulatory modernization and data-informed decision-making. She previously led the agency's business transformation strategy, enhancing transparency, public trust, and regulatory effectiveness. Manon also held senior leadership roles at Health Canada, including Acting Associate Assistant Deputy Minister in the Health Products and Food Branch, where she played a key role in regulatory oversight during the COVID pandemic. She holds a PhD in environmental toxicology and an MBA. Just before we begin the webinar, I would like to extend a special thanks and welcome to a number of VIP guest attendees. In addition to many representatives from our 14 CAFII member companies and our 14 associates, which are key supplier companies to the bank assurance sector, we have VIP attendees today from allied industry associations, such as the Canadian Life and Health Insurance Association, or the CLHIA, the Travel and Health Insurance Association of Canada, or THIA, and as well from many insurance and financial service regulatory and policy-making authorities, including regulators and policymakers from the following organizations: the Insurance Council of BC, the British Columbia Financial Services Authority, or BCFSA, the BC Ministry of Finance, the Alberta Insurance Council, the Government of Alberta, the Financial Service Regulatory Authority of Ontario, or FSRA, the Financial Consumer Agency of Canada, or FCAC, the Federal Department of Finance, Government of Canada, and the Ombudsman Service of Life and Health Insurance, or OLHI. Now, let's get started on our webinar. Hi, Manon. Thank you so much for joining us today and sitting down for the next hour to chat. November is almost done, which is wild to say. And as we all know, November is Financial Literacy Month. So I was wondering if we could just talk a little bit about the FCAC's role in financial literacy. Can you talk more broadly to how the FCAC works with members for that ecosystem to advance financial literacy?
Well, first, Robin, let me thank you. Thanks to CAFII for inviting me to this webinar. It's really a pleasure to be here. So just before, I'll just talk briefly about our role as an organization for those who are not familiar with FCAC. So FCAC is an independent federal government regulatory agency, and our mandate is to protect consumers. And we do that in two ways. First, we supervise federally regulated financial institutions to ensure that they comply with consumer protection laws. And this includes, for instance, providing clear disclosure, obtaining express consent during their sales process, offering appropriate products and services, and the fair and timely treatment of consumer complaints. We also work to improve the financial literacy and well-being of Canadians, and that's the topic of today. So we do this by working with many organizations on this call, but also others, by providing trustworthy and unbiased information and resources for Canadians and our partners to use. To inform our work, we conduct a lot of research to understand the challenges that Canadians face. I have a team that run behavioral experiments to test what works in terms of nudges, for instance, to help people build confidence and skills in financial matters. Our view is very simple, and we think that a better informed consumer makes a better protected consumer. So when people understand their products, the financial products that the financial institutions provide, they feel confident and they can make better decisions. So the work that we're doing on the National Financial Literacy Strategy, which is we're renewing at this time, we're preparing to renew it because it ends in 2026. We lead the development and the implementation of the strategy, working with all of our partners in the ecosystem. And that strategy sets a shared vision for how to improve financial outcomes and resilience across Canada. But collaboration is a very critical component of the success of this strategy. Since we launched the current edition, we've connected with hundreds of organizations across the country. It includes industry, nonprofit organizations, academic institutions, community groups, all working toward the same goal, which is improving financial literacy and well-being of Canadians. We also introduced a measurement plan in 2022, which is one of a kind, if I may say. And organizations who have adopted the strategy can integrate the measures in the plan into their own programs and share the data collectively with the partners so that we can track collective impact. We also created what we call the Research and Data Exchange, or RDX, which is available on our website. It is really a centralized hub where every partner on the strategy can access and will soon be able to share research and data. On the RDX, we recently published data stories. I hope that many of our participants today have taken a look at that. They're meant to provide in plain language what our survey findings are telling us. And we've published 4 to date. So one is on savings for children, post-secondary education. Another one is preparing for retirement early. Another one is speaking about fraud, which is very relevant today. And the other one is about getting financial advice. So those are just few examples of how we work with a very rich financial ecosystem. And our goal is to build a system where Canadians have the knowledge, confidence, the tools to make sound financial decisions.
Yeah, that was a lot to unpack there. That's awesome. Those are great initiatives. I also really resonated or found it really interesting what you said about an informed consumer. At CAFII and with our members, we really believe in you providing those informations to Canadians. You want an informed consumer. So I was wondering if you could speak related to that, to the role of provincial versus federal partnerships play in increasing financial literacy and informing consumers. How do those two kind of interact?
So that's a great question, and I had the same when I was working at Health Canada. What's the jurisdiction of the government at the federal level versus the provinces? So financial literacy is really a shared responsibility. The federal government, through our agency, sets a national vision via the strategy, but we do that not behind our closed doors. We do that in consultation with all of our partners and stakeholders, including the provinces and territories who play a critical part. So really, the strategy is meant to provide a common framework for all of us to work and a measurement tool so that we can align to ensure consistency, but also greater impact across the country. The provinces and territories also play a critical role in the delivery of the national financial strategy. But some, like Quebec, for instance, have their own literacy strategy, which is excellent. And some provinces have also integrated financial literacy into school curricula, which we also welcome. For instance, Ontario recently introduced a mandatory financial literacy component in their grade 10 math program, and other provinces have similar initiatives. So the interaction between the federal and the provincial partners is truly collaborative and complementary. And the success of the national strategy depends on that. Because national goals can only be achieved with provincial engagement, and often provincial goals will also require federal support. So I hope that helps.
Yeah, that definitely helps. And speaking anecdotally, I wish I had had some financial literacy or financial training when I was in high school. So love that they're talking to grade 10ers about this stuff. I realize I'm going to jump the gun a little bit. First of all, congratulations on the 15th anniversary for Financial Literacy Month this November. That's so exciting. I was wondering if you could explain to anybody online or who is attending that are not familiar, could you give us some background on Financial Literacy Month, on this campaign, and how it kind of fits with your FCAC's mandate?
Thanks so much, Robin, for raising it. 15 years is quite a milestone, and we're very happy to lead this again this year. And it matters now more than ever. So we do that every November. We bring together organizations across Canada to help Canadians build financial literacy and confidence, ultimately to build resilience and financial well-being. So the campaign is really about action. It's about making money conversations a more normal occurrence to empower people to make informed decisions. It reflects one of the core principles of our strategy, which is that financial literacy, again, is a shared responsibility. We all have a role to play in it. So the theme of this year is Talk Money. And why? Why have we chosen this theme? It's because more than half of Canadians have told us that they struggle to keep up with their financial commitments. And we've heard that in 2024. So when money feels stressful, people stay silent, and that silence can make things worse. Our research has shown that talking openly about managing money actually boosts confidence and leads to better outcomes. For example, we did a study with young women, and I'll talk about that a bit later, but sharing their experiences actually reduced stress and encouraged them to take positive habits like saving and paying down debt. So this month, we've been challenging Canadians to start the conversation. And one way to do that is a stretch challenge. Take $15, which is about the average minimum wage in Canada per hour, and share what you've made with $15. It's a simple way to spark ideas. And I've heard some, for example, sharing creative recipes, like making soup, or a pasta dish that could feed a family for under $15. Others said, I'm walking instead of taking a cab, for instance. Others have turned that challenge into a fun activity by, baking muffins or bread at home instead of buying snacks. The focus this year is on youth and young adults, ages 15 to 30, because these are really formative years. As you said, I wish also that I had learned financial literacy when I was in high school. I heard it I learned it the hard way, like many Canadians. But people make big financial decisions during that period, and often with limited knowledge and support. So we're trying to meet them where they are, whether it's online, in schools, in communities, with content that is relevant and inclusive. And we know from our Canadian Financial Capability Survey that younger Canadians within that age bracket, they often turn to friends, family, and social media for advice. We just published, as I said, a data story on financial advice. And that's what we found out. Like over, many of them who turn to advice, they go to their friends and family. They don't go to professional advice. And with more social media, with generated content from AI, that is a risk. So how do we help them? We're working with partners to make sure that they can find accurate and practical and trustworthy information. So just to close on the Financial Literacy Month, I'd like just to maybe give a shout to everyone who's joining us today. If you haven't done so already, we still have the rest of this week. Share resources, start conversations, help Canadians, especially the young one, feel confident about money, because financial literacy is a collective effort, and only together we can make a real difference. So thanks for the question, Robin.
Yeah, no problem. Your answer got me thinking so much because I'm guilty of, talking to my family members about financial planning, RSP investments, those sort of things. And I'm even realizing now that I've worked in the insurance industry for a couple of years, none of my friends have had conversations around insurance. And it's crazy to think that, people are buying houses now and there's no conversation around insurance. So anyway, I really resonate. And I wonder if you could keep speaking sort of to the initiatives the FCAC is working on in terms of financial literacy to help sort of vulnerable or at-risk groups or underinformed groups. Like you said, you mentioned young Canadians, lower income Canadians are another example. And I also totally resonate with when you talked about a study for women, sometimes people are left out of conversation. So I was wondering if you could elaborate a little bit on that.
Yeah, absolutely. So we know that financial literacy is not a one size fits all. So vulnerable groups, whether it's young people, newcomers, lower income Canadians, often face unique challenges. So we try to design initiatives to meet them, where they are and that are specific to their, to help them in their specific circumstances. And we do that by leveraging behavioral science. So we have a behavioral science capacity at FCAC. And why we have that? Because it does help us understand what actually drives financial confidence and positive habits, and how small, very low cost interventions can actually make a big difference. So one example, and you alluded to that, is our research with girls and young women aged 16 to 25 years old. So we did a study with the Carleton University, and our study showed that women often have similar financial knowledge than men, but they report lower confidence. And that gap matters, because if you don't have the confidence, that influences the decisions that you make or you don't make, and you miss opportunities. So partnering with Carleton University in Ottawa, we tested online activities that actually encourage participants to challenge stereotypes, share personal stories, and define concepts in their own words. And the results were quite powerful. At first, women actually underestimated the number of financial literacy questions that they answered correctly by 24%. So in other words, women had much higher financial knowledge than they thought they did. But through their participation in these online activities, their confidence level actually increased and continued to grow. We measured it again a month after the intervention, and it did continue to grow. Financial worries also decreased, particularly among those from lower income backgrounds, and positive behaviors like saving or repaying debt, for instance, increased across all the groups. So this tells us that creating spaces where young women can reflect and talk about money can actually boost confidence, can reduce their stress, and encourage better habits. So yeah, that's one reason why we're doing the Talk Money campaign, is to encourage those conversations. And again, I invite everyone to support that, and removing the barriers, challenging outdated norms, and making financial resilience really a reality for all Canadians.
That's great. It's so important, especially with the rise of like AI and social media, and just not to say that there's all this financial misinformation going on, but it's less, you never know if it's a trustworthy source. So I think that's incredible. Staying in that vein of research projects, are there any other research projects that the FCAC is currently, moving forward with? Can you speak to that?
Yeah, so as I said, research is really at the heart of what we do, because it does tell us where Canadians are struggling and how we can help. And we do test a number of interventions, and we iterate and scale up, when they work well. And one area that is of particular interest to us is consumer debt and indebtedness. It's a growing concern. We have a monthly financial well-being monitor that's actually on the web, and there's a dashboard that shows you can look at the data from various angles. And that monitor tells us that 1/3 of Canadians is borrowing money just to cover the daily needs. So that is significant. And 40% say that their debt has increased, as month by month, we see an increase. So these are clear signs of vulnerability, and they help us guide our efforts. Credit card is a major pain point. So we partnered with the researchers this time at Queen's University. Again, we don't do our work on our own. We do partner with several academics, for instance, to deliver that research. And we've also partnered with the University of Rochester to test a simple idea. Could a short, behaviorally informed digital intervention, like a nudge people pay down their debt faster? So we ran a 5-minute intervention, and we used the Optimity Healthy Lifestyle app, 25,000 participants, and the results are not yet public. So here's a sneak peek of what we found. Those who had credit card debt, the group that received the nudge reduced their balance 35% more than the control group. So that is significant for something that takes just 5 minutes. And this is exciting because it shows that however small, low cost interventions that are scalable can drive big impact. So we're leveraging these interventions, and we're looking at how we can bolster their impact nationally. And now we're looking at digital financial literacy, of course, Fraud is another topic of great focus for the FCAC, as you've seen in the budget announcement, and national focus, and also informed consent. But our goal is always the same, is to use the evidence that we have to create tools that are practical, that are relevant, that are timely to improve financial resilience of Canadians. And we do that with partners so that we can share insights and scale up the work.
That's so great. Speaking about from all the research that you've done, are there any particular themes around different groups or certain groups of Canadians in terms of financial literacy gaps? Have you noticed any reoccurring themes?
Oh, so that, for instance, is one of those. So we have, like, the data is available on our website. I could give you a long list, but yeah, it's all on our in our financial monthly monitor. It's in the financial capability survey as well. But that keep increasing. Fraud is also a topic where we're seeing increased scams, scams and phishing scams, for instance, and fraud has increased by 3 times, since the 2019. So we do surveys, not always on the same topic all the time, but we've seen increase in fraud and many other areas that really raises concerns about how can we best help Canadians have the tools, but have them in a timely manner to nudge them to make the best decisions for themselves in a way that benefits their financial well-being.
I wonder too, because you spoke about earlier about women and girls typically having maybe the same financial knowledge but a little bit less confidence. I wonder if that makes them an inherently more vulnerable group to fraud or to scams like that, lacking a certain confidence in self and trust in self. I'm like, does your research find anything that makes people or certain groups increasingly vulnerable, even if it's just lack of confidence?
So we're definitely looking into this now. We did a survey, as I said, in 2019, another one in 2024. So we're continuing that to see how we can identify groups where, that need a bit more support, but definitely vulnerable groups. They're always most affected, and not only in financial literacy. I could say the same thing on the health side or environment. Indigenous people. So we want to make sure that they have the tools at their disposal. So we work with community groups as well. As I said, we don't do this work alone, but vulnerable populations is definitely an area of focus for us.
Great. I know, and I realized as we're talking about these research and all this, I was curious, could you talk about how you guys actually measure impact and track this progress that you're seeing or that you're making?
Yeah, so measuring is critical. It's not enough just to run interventions. So we need to know that we're making a positive difference, because if we're not, then we need to shift gears. And we do that in various ways. So as part of this strategy, we developed the National Strategy Measurement Plan, which is the first of its kind in Canada to our awareness. It helps organizations across the ecosystem measure outcomes in a consistent way and share data so that we can measure collective success. We also conduct nationally representative surveys, as I said, and we publish this data on our website. It includes the financial well-being survey that has been fielded monthly, and we do that since we've been doing that since 2020. So we have quite a wealth of information out there that anyone can use. And that helps us shape interventions and ensure that they remain evidence-based. They're targeted to address the most important issues, and they're responsive to Canadians' needs. The other measurement tool that is just off the shelf is the Financial Resilience Index, which we refer to as the FRI. We're currently testing it now and developing a baseline for it to allow us to measure longer-term impacts. But the intent of this tool is to provide additional insight as to how Canadians access resources and apply their skills and knowledge and their confidence to make financial decisions, but during times of financial challenges, like during periods that are more difficult, like in spending times like Christmas or during the holidays or Thanksgiving, where in these bursts of financial expenses, how are people actually keeping up with the expenses and their on daily cost and daily cost of living. So that's a tool that's coming, and look forward to tell you more about it when we're ready.
Yeah, and we will look forward to hearing about it. That sounds great. Kind of pivoting slightly, but a key goal of, the national strategy is this, what we're talking about, reducing barriers and contributing to a more inclusive country. Yet financial inclusion rates in Canada are high in many areas, with most already having access to, like a bank account, to digital payment systems. What more needs to be done in terms of increasing this? Is there more that needs to be done?
Definitely. Canada does very well globally on inclusion, on financial literacy and inclusion. Most Canadians have a bank account. I think the percentage is like 98%, either a physical or digital. And that's thanks to a very robust legislative framework that we have in Canada. There's a requirement in the legislation to, it provides the right for all Canadians to open a bank account. And cash, for instance, Government of Canada checks for free with proper identification. But access is just a starting point. Having an account is one thing, having products that fit your needs and your situation is another one, and understanding the products and knowing that you can shop around, the education and the financial literacy aspect is also important. And that's why we were very pleased to see in 2022, and I know this is going back quite a few years, but the important measures that were introduced in the legislation in 2022. And one of the most significant changes at the time, which we're supervising now, is requiring the banks, financial institutions, to offer and sell products and services to their customers in a way that is, products and services that are appropriate to them based on an understanding of their financial needs. So in short, the financial institutions must consider the circumstances of the customers before recommending a product. And this reduces the risk of consumers being sold things that are too costly for what they can afford or unsuitable to meet their needs. As another example, we've recently reached an agreement with the financial sector and a number of financial institutions to modernize their commitment to provide low-cost, no-cost accounts for consumers. And this is also on our website, and we have the list of signatories. And the new commitment ensures that all Canadians can have access to modern, basic banking services at a very nominal cost, with targeted groups that will benefit from the no-cost account. So this is coming into implementation December 1st of 2025, and we look forward to seeing even increased access to financial services and products. And I'm sure you've heard about the recent budget announcement. There's additional measures in there. Should they pass through the Budget Implementation Act, they will also add benefits for financial consumers, and we are very supportive of those measures.
Great. So essentially, and correct me if I'm wrong, what you're saying is these sort of things, access to bank account, all these things are related to financial literacy. They're a right, not a privilege. And so we're trying to give these to all Canadians. Just out of curiosity, when you said about 98% have bank accounts, do we know what the 2%, what the outliers are? That even though 2% is a small group, I'd be curious. Do we know why or who they are or what?
We can look into that. I don't have the answer to that specific question, but I'm assuming, sometimes, if you're in a rural area where you don't have good access to internet or for different reasons, some just don't want a bank account. So, they use other methods to keep their savings and to do their transfers and all of that. But there are probably very good reasons and others that are system created, and that is also something that we keep an eye on.
Yeah, I find more and more working in this sector, the financial sector too. You very rarely see one answer. There's always it's a complex, multiple reasons for something. Thanks for answering that. So just curious, we spoke about, national strategy, but I'd be curious, so how does Canada rank internationally in terms of financial literacy? Do we have a gauge for that?
Yeah, so OECD, they do a regular survey of adults and young people as well in terms of financial literacy, and Canada performs quite well on that, but we should not be complacent. There's always room for improvement. So Canadians generally score above the average of other OECD countries in financial knowledge. For instance, Canadians aged 15 years old, they have a mean score of 519, so 21 points above the average. So that's something that we need to be proud of, but averages hide gaps. like 98%, So we see lower scores amongst youth, Indigenous people, and populations facing financial vulnerabilities. So Canadians that are aged between 18 and 24, for instance, they scored lower than older adults, and Indigenous people usually have lower scores compared to non-Indigenous Canadians. So these gaps matter because they translate into real life challenges. So where we lead as a country is in our commitment to continuous improvement. So that's why we're renewing our national financial literacy strategy. And we want the next edition of that strategy to be truly national and sharply focused. We cannot do it all. We need to focus, and we need to focus on the most important financial consumer issues that we're facing today. So truly national does not just mean engaging the ecosystem broadly. It means in building on the strong foundation that we have, but go further and deeper and more coordinated action that drive measurable outcomes across Canada. And sharply focused means that we're going to prioritize actions that deliver the greatest impact. So reducing the most significant barriers, scaling interventions that we know work, and measuring impact in a very rigorous fashion. But we're not doing this in isolation. Our European colleagues, for instance, just launched their financial literacy strategy in September. So we work with our international partners to look for opportunities to share best practices, learn from each other. And so far, that has been incredibly helpful. But the bottom line is, while we rank well, we cannot be complacent. Our goal is to close the gaps and really make financial literacy and financial resilience a reality for everyone, because Canadians deserve nothing less.
Yeah, I love that. Are there particular international jurisdictions that you guys work with that have been most helpful or most informative? I know the UK or the FCA over in England has written a lot more about finfluencers and trying to crack down on that and the misinformation there. I'd be curious if there's any jurisdictions that you guys really work with.
Yeah, each jurisdiction, I would say, have their particular best practice. Some, like the northern countries, they score very well. So I recently went to an OECD meeting and I asked them, what is it that you do that makes you so good, in terms of financial literacy? And the few things that I got from that, first one is action plans. So it's good to have a strategy, 5-year strategy, but if you don't measure, sit down, with all the partners on a regular basis, look at what works, what doesn't, make adjustments like in a very agile way instead of waiting after the 5 years and you do a full assessment. So be more agile. And the northern countries are there. They're doing that. Portugal is doing that as well. Estonia was quite interesting because it's a very small country, and they have apparently 35 finfluencers, who they leverage quite a bit to share trusted information on financial matters. So the finfluencers actually is a network that the regulator uses to inform. And there's risk to that in a country as big as Canada. But I think there's opportunities and risk. But it's trying and, scaling up for things that work that's what's helpful, is getting those ideas, trying it, whether it works or not, and then you amplify those that work to maximize the impact. So lots to learn from but in Canada, our measurement plan, our financial resilience index, is seen as very leading in the global sphere. And the fact that we're renewing our strategy, it's now, I think, the 3rd iteration. Some countries are just starting. So they're also looking at Canada as a model and what we're doing that they could apply. So it goes both ways.
I love that. Yay, good for Canada. I love that we're taking it, again, staying on theme of talk money. We're starting the conversation with it here, but also helping other people start the conversation abroad. So that's wonderful. I have a bit of a two-part question for you. Do you find that it is harder to communicate with Canadians the importance of financial literacy and knowledge, especially considering the stresses people, we have political stresses, we have economic stresses, it's just growing. Do you find it difficult to talk to Canadians about this stuff?
Well, yeah, there's a lot of information. I think Canadians, not only they're under a lot of financial stress, especially now more than ever, they're also inundated with information and not always trustworthy information. So that makes it hard to prioritize, where we need to focus our efforts. And as I said, the data shows us that one third of households borrowing money for daily expenses, and 40% of the Canadians have seen their debt increase. That increased stress, and it does come at the cost of focusing on short term versus longer term, or seeking advice, for instance, on financial matters. So our biggest challenge, I think, is cutting through the noise and delivering clear, practical guidance that are relevant for people everyday's lives. They don't want theory. They don't want things that are in the cloud that they don't understand. They want timely solutions, practical solutions that work at the time that they need it. So that's why we focus on really meeting Canadians where they are. And one area that we've been doing some work, for instance, is the workplace. We've done quite a bit of work, but that's an area that we're looking at, what works and what we can do to increase our efforts there. We also experience challenge against engagement and accessibility, reaching diverse communities with limited digital access or language, cultural barriers. Those are all barriers to access. When you were asking about the 2%, those are potential reasons. So even when people know what to do, turning knowledge into action is hard, especially under stress. So we try to provide information in a timely manner, but also in a language that they can understand. And we provide insights to help our stakeholders, and we use the insights from our stakeholders as well to create tools and programs that make financial literacy actionable and empowering, not just informative.
Great. And you answered, my second part of that question, which was going to be what are the biggest challenges, about improving these levels. But I think what you communicated is cutting through the noise. That is the biggest challenge, making sure people are getting the information they need in a way that they can understand. Because I know, correct me if I'm wrong, a lot of financial jargon can be hard for the average. I can find it intimidating.
Yeah.
I guess I was going to ask too, is it ever a challenge? Do you ever come across any challenges around distrust for industry or government, however unfounded? Is there any of that comes up?
No, that's not something that we really look at least not that I'm aware of. We provide trustworthy information, but we're not the only ones. Many of our partners do. So we try, and that's what we're trying to do through our RDX, is provide a one-stop shop where Canadians or academics or any partner in the financial sector can go and use the tools that collectively we provide that are trustworthy. So we're trying to play that role. It is, there's lots out there. So again, we're trying to find what's the best way to reach Canadians and give them access to the tools they need in a timely manner. And those are not tools necessarily that are built or developed by FCAC, because we have very limited resources. So really is, how do we bring together the collective richness of tools and interventions that are available, that are trustworthy for Canadians. So that's an area that we're currently looking into.
We tell my friends, I'm like, don't necessarily trust ChatGPT. Trust, if you're going to look up financial stuff, we have so many great government, we have so many great resources available. Maybe don't necessarily always trust an AI source, branch out. So yeah, I 100% think that's great. Speaking of that, could you maybe speak generally about the strategies you would recommend to somebody looking to stay on top of their finances or improve their financial literacy or their financial outcomes? Where would you recommend they go or begin?
Yeah, so I would start with the basics, the budgeting, saving, paying down debt. A budget is not very complicated. It's basically a plan for your money. You can do that on a piece of paper. There's systems and there's very, very sophisticated tools that you can use, but it doesn't have to be something complicated. And it helps you see not only what you've earned, but also what you spend and what you can save. And it actually works. We've done some research in that area, and 70% of the people who actually budget, even if they do this on an intermittent level and a basis, they keep up well with their financial commitment compared to 40% of people who don't budget at all. They don't keep up well with their financial commitment. So budget helps. And there's that psychological barrier that people have about budgeting. They may feel overwhelmed with it, but from time to time, if you do it, it will really help you. When it comes to savings, I would say start small, start early. Especially for students, don't wait till they're already you're going into university or your retirement. Don't wait to get to that age. You need to plan early, even if it's small amounts that you save on a monthly basis. It does make a difference. Don't wait for a crisis to happen because saving even a little early builds resilience and will reduce your stress level later on when that crisis happens. And talk about money, sharing experiences with your family, with your friends, on how someone successfully save, for instance, for a dream vacation or manage to pay down a debt. Sharing that information can actually help others and spark ideas and make really financial conversations normal. So I think when we share, we actually learn, and that's kind of the starting point. And if you're facing financial challenges, remember that you're not alone. We have financial institutions, financial advisors. Talk to them about options like mortgage relief, debt consolidation, insurance issues. There's also credit counseling. Those are all ways of dealing with the challenges. But talking to a professional about these issues, talking to friends and family is helpful. And most of people do go there. But there's also professional support that's available that people may not be aware of. And remember, and that's something that many people surprisingly don't know, is you have the right to shop around. Not because your financial institution offers you one product, that's the only one that's available to you. So compare products, compare services to make sure you get the best value for your situation. And we have some tools on our website, and many other organizations provide some really useful tools to help with that. So these steps, budgeting, saving, talking, seeking help, and comparing, I think are building blocks to build confidence and resilience. And again, it's not about getting the perfect tool. It's just using what you have and when you need it. And start small, start early. Every step counts.
Yeah, it makes so much sense. My parents, I credit them for starting the conversation with me and my sister about saving. Something else I think that I really do love, and you can tell me if I'm correct, that about the theme of this month is it's about reducing that stigma.
Yeah.
And hopefully any shame people have about either, having debt, we all have debt, and sometimes debt can be good. So I really appreciate what you're saying about talk about it. Let's get rid of that shame. We don't need it there. I think that's great.
Exactly. Yeah.
I maybe have exposed a little bit of my bias is that I have some hesitancy around ChatGPT and AI, but I'd be curious on a positive side, what opportunities do you see for new technologies to actually help people? So we can, put a positive spin, and I'll question my own biases.
Well, I remember when internet came, everyone was afraid, oh my God, so everyone thought everyone would lose their job. Like, it's just that when there's innovation, there's always that fear and that, skepticism. But now everybody uses internet. And we're getting there with AI. I think it has tremendous potential, especially to make financial literacy more accessible and personalized. But it has some risks, and we need to be aware of those risks and make sure that collectively we help consumers and we detect and we protect and mitigate those risks for Canadians. We actually recently held a workshop a couple of weeks ago with a number of organizations, regulators, industry, academics, and others on AI, and the focus was on consumer protection. Really focused on how we can strike the right balance between fostering innovation, but at the same time protecting consumers. Because AI tools can provide advice. They're very helpful in interactive learning, real-time support. So that helps Canadians build confidence. And AI can also analyze trends, for instance, to identify where people are struggling. And that enables targeted intervention. So even for regulators, it's a useful tool. But there's some downsides, and addressing them proactively, I think, is critical. Privacy, data security, these are things that must be safeguarded. because these tools often rely on very sensitive financial information. So you got to make sure that if you use AI, that you're aware of that. Your information goes somewhere in the cloud and could become accessible, and then there's a breach of privacy. So there's risks there. There's also risks of biases with algorithms, which may disadvantage certain groups. There's also the challenge of information accuracy, of course. Incorrect advice can have quite serious consequences. So you got to be careful what you ask and what you get. Always need to validate with different. It's like, when you get advice from various sources, not just from one. So I think it's the same thing with AI. But we need to ensure that the technology does not widen the gap for those with limited digital access or limited literacy. So we're working with our partners, trying to understand what the opportunities, what the risks are with AI, and how we can help consumers navigate with these new tools and while staying protected and benefit for their financial well-being.
It makes sense because, AI is not going anywhere. These large language models, they're here to stay, and that's true now. So we might as well use them.
Yeah.
Let people use them, but safely. So that makes total sense to me. We also have a question in the chat. They were just anonymous asked. Usually the FCAC has a kickoff event at the beginning of November, and you guys didn't do that this year. So the question just asked if that was a conscious decision. They said that they're hopeful you'll do it next year. I'm going to assume I've been to your kickoff event and it was great. I went last year, so I'd be curious too if why you guys didn't do one this year.
Yeah, so I've been at the agency now for 5 months. So I did one last year, and I keep hearing about it, how people loved it. So yes, I mean, there's none, we would have announced it if there was one in November or December. So no, it's not happening this calendar year. I cannot commit for sure that something's going to be done next year, but I'll talk to the team and see what the plans are. But I've heard so much good things about these conferences, so I suspect something's coming, but I just don't have the answer for you right now. Apologize.
That makes sense. And yeah, 5 months. So congratulations on being 5 months. That's awesome. I went in 2024 and it was really fun. It was at the museum in downtown Ottawa. So if there's one next year, I'll be there. So we have one more question for you just before we wrap up. It's just a broad, open-ended question. If there's anything else that we haven't talked about, that haven't been mentioned that you would like to talk about before I pass it back over to Keith.
Yeah, so thanks for this opportunity. This is a good question. So the way I think about financial literacy, it's like driving a car on a very fast digital highway. You don't need to know how the engine works, but you do need to understand the rules of the road, and you need the GPS, to keep you informed, to warn you about traffic jams, road closures, and really help you find the best route and navigate, through the noise, through, the traffic in real time. So you need that knowledge. Without that knowledge, you risk having accidents. Again, to the analogy of driving. So if you don't have financial literacy, when crises come, you're not prepared. So to navigate confidently, avoid hazards, and reach your destination, even when the road gets bumpy, you need more than a map. You need kind of a GPS, and that's what financial literacy provides. But even with a GPS, accidents happen. We all know that. Even the most educated drivers can hit, for instance, black ice or can have an accident. So we need more than the knowledge. We need systems like airbags in your car, that protects you. And we need systems that detect what could go wrong before it happens. So building the GPS and the guardrails around driving, same thing for financial literacy and financial well-being, is something that one organization cannot do alone. It takes all of the ecosystem. So it takes industry, of course, government, regulators, provincial, territorial, federal, indigenous partners. It takes educators, communities to really design the information, the tools, and provide it in a timely manner and trustworthy manner to ensure that Canadians can navigate to the financial situations safely. So I think I would leave you with that.
That's great. I think the word I keep hearing more and more through conversations is just collaborative, and I think that's so important. Yeah, on a personal level, and just from my time in the financial sector, I'm like these collaborative conversations, caring for Canadians, caring for each other. I think it's so important. So, Manon, thank you so much for talking with me, for your great, insightful, thoughtful responses to these questions. I'll just pass it back over to Keith to close out the webinar. But yeah, thank you so much.
Thank you, Robin.
Well, that's just great, Manon. I know that our attendees will have found it very insightful. I hope it's all right if I just ask one additional question that came to mind during your conversation with Robin about the research you do. And you mentioned that there's international research, other jurisdictions that you share your research with, and they share their research with you. Is that accessible to the public? Is there a place on your website where we can see what the international jurisdictions are doing so that we can gain access to it? And I guess I would also ask if you have any plans to enhance your sharing of what you do, because it sounds like you're doing so much important work and it's great for Canadians, but it would be great to see that shared with other parts of the world that could benefit from the work you're engaged in.
Keith, thank you so much for this question. It's a great one, and it's an important one because like all organizations that are interested and that have expertise in financial literacy do a great job. But if they don't share that information, it leads to duplication of work, and we don't know what the gaps are because we don't know what the collective covers. So we're hoping that our RDX, which is the hub, the portal that I talked about before, will serve that purpose. We're not there yet. We're still in the planning phase and discussions. We'll soon be discussing that with our partners. But we want to create that space where academics, regulators, even with the provinces and territories, we can share what we each do and the research findings and insights with each other to help and maximize that impact. So it is something definitely it's on our mind. Early days in terms of that's the next phase of the RDX, but it is something that we feel is needed, and we've heard that. And I know our international partners are also looking at how we're going to do this because they find this quite interesting for them as well.
And just a follow up on that, is there work being done in Canadian universities in terms of understanding some of these financial literacy gaps and why they're occurring? I mean, it's not something I'm aware of in terms of academic research, and yet it seems like such an important issue for Canadians. You'd think that there would be more studies on it. And obviously, the government is doing it through FCAC and the provinces, but I'm talking about independent universities doing work on it in collaboration with you.
Yeah, actually, Keith, we just published papers from 4 students who were winners of our student competition on financial literacy. We do that on a regular basis with partners, other government departments. And I talked to the students, and I know the commissioner talked to them as well earlier this month. Amazing papers, amazing research. And now we're looking at what can we do with these findings? They're so great, and they could be so helpful for Canadians, not sitting on a shelf, but being implemented. So there is a lot of activity going out, but it's probably not surfacing as much as it should. So creating that hub will help. But we do have a student competition that we do on a regular basis, and we publish our papers, and I'm sure other organizations do the same. Maybe the provinces and territories do that as well. And academic organizations also publish their papers, but we want to bring it all together and hopefully in one place, and then see what the wealth of information from that. But it's turning that information into action. That's the next step that we're looking at.
Well, that's great. I just want to mention to the attendees that this is a fantastic conclusion to our 2025 webinar series. We will have a series of webinars in 2026, and we look forward to sharing those with you. Manon, on behalf of Robin and I and all the people who are on the webinar today, we can't thank you enough. The hour flew by, just full of insights and interesting information. And I sincerely hope that we at CAFII and my members will be able to continue to collaborate with the FCAC and with yourself. I think we're, as you said, stronger working together and can sort of supplement each other's efforts if we collaborate to the greatest extent possible. So I look forward to doing that. Thank you again. And for all those who are on the call, I wish you a great rest of your afternoon on behalf of Robin and myself. Thank you, Manon.
Thank you, Keith. Thanks, everyone.
Thank
Have a
you.
good day.
Bye.
Bye-bye.
Bye.